Hi, good morning, everyone. Louis Porcelino, Manover Market, and today is the 19th of November, and your ES Morning Call. All right, I've been kind of a hot streak lately. Yesterday, I told you that 2060 half, down there would be the key, and we bounced off it 3 times, and then we turned positive. Also, once again, yesterday, the Russell midday turned negative, and then once again, when it turned positive, we had all three of them going in the same direction. So, this could be you. I think we're going to run a contest. I don't know what it's going to be yet. You'd be over here and sit here for a week and trade at our monitors and be next to me and get all the benefits of my my knowledge and the way I throw things at the screen when things don't go my way, I guess. Right, Anthony? What do we go through? About 2 monitors a month? We're on a 2 monitor a month. All right. And no shave November is starting to get to me also. I'm starting to get the screen, the camera is crooked, Anthony. I think we're getting everybody crazy. And everybody thinks my book is backwards. It's not. It's in Chinese. That's why you're seeing it backwards. All right. Okay, so little levity this morning. We need to look. Here's an interesting thing.
Yeah, throw that mic around your neck.
Oh, I'm sorry. All right. I'm sorry. So interesting to think about, right? If the Feds raise the rate a quarter point, okay, and it kind of becomes a dismal thing for the economy, or it has an aftermath that's dismal, they'll probably still do QE, right? They'll still quantitative easing. They're just going to have to pay themselves more because they're going to have to buy it with a quarter point interest rate hike. So I think that the rate hike is more psychological than it is anything else. And I'm so tired of hearing about it. Just get it over with. I mean, this, the thing that is funny is that I tell this all the time, right? When I first started trading, interest rates were 19%, right? They used to move up and down the scale by 2 basis points in a month. So, anyway, I've seen interest rates go from 19 to 0 in my lifetime, and I saw gold go from 850 to 375 to basically almost 2,500 or wherever it topped out up there. So, I just think that there's a lot of interesting things going on, and there's some very smart people out there trying to figure out what's going on. And look, you don't have to be a smart person to figure this out, right? Our key is that we're never, someone made a comment, anybody trading 1,000 lots yesterday? Yeah, there's people trading 1,000 lots. The people that know, right? The Goldman Sachses of the world and the customers that know what kind of news releases that are coming out and what's going on. So we just got to, and I trust me, we keep trying to develop more indicators, more software, more things that will let us get an insight into what they're doing. Okay. So just stick with us, and we'll keep you guys ahead of the curve. And I just got, these programmers. I just don't speak their language all the time, right? So we're almost there. We're almost there, and if you stick with us, you're going to enjoy what we're doing. So let me go to share the screen. Let me go to this screen right here. All right, this is a day chart of the S&Ps. Yesterday, I tweeted out this is a simple moving average, a 200-day moving average, which we got over yesterday. Look, here's the key: are we going back up here? Right? Are we going back to 2110 area? Okay, we got to get above that. Here's this platform has a thing called the consensus widget. The top of that consensus widget they break out is right here at 2119.28. 2119.28. Sort of, and this is a fib number. Let me. All right. I didn't do that right. Let's go here. All right. Let me take this off here. Remove. Let me go back to the Fibonacci, and let's put the top up here. Okay. That's the most recent top. Well, actually, it's the high. 2134. Okay. And let's draw it down to here. Okay. And that's where we're at. 7.64% is where basically the 200-day moving average is sitting. So that's a retracement from there down to that low, okay, which is probably the August low there, right? Okay. All right. So that's where we're at. Real simple to look at that. And so, are we going to go up and make new highs, right? That's the key. This is the breakout will be at 2117.75, 2117.75 on the day chart, on a day chart. So let me get rid of that and let's go to the profile. All right, overnight. So we've got a high up here, right here at 2089.25. We've got a low right here of 2077.75. Okay. This purple line is an indication of an old top, which we took out. There's another old top, which we took out. Okay. And we did it during the Globex time. So I think there's got to be affirmation during regular trading hours. So we got another old top up here at 2097.75. Look, I'll just go back and I'll show you. I get there, right? I just go here and I see, all right, here's an old top. All right. It's incomplete too. When I also put an old top, this one's, if I put it in purple, it's incomplete. Okay. And then we've got this one also. And then right here at 2099.5, single prints up to 2103. And this whole area up to 2103 up to 2105. So I think that's the next leg up. It's the next step up, the next leg up. However, okay, and there's always a however, all right. When we look at the move, I mean, these moves that are going up, this is sort of like what happened, right? You kind of, you want to go back and you look at the structure of how the market moves were made. And right here, okay. I mean, do we need more volume in these areas? When I go back and I look at, this area back in here, there's been a lot of volume in this area. So there's been trading areas. So I think going back and trading in this area is important, and the market will gravitate to where these markets are, but where you need more volume. Whoops. Sorry. Walk around that way behind the camera. We got more people coming here working on our stuff, and sorry for the distraction. All right. So that's what we got. We got a poor bottom here from yesterday that's unfinished. Sometimes I get lost for words because I'm not used to the markets trading like this, where you get everybody on one side, right? You get everybody on one side and they create poor structure on the bottom, right? And I think that one of the things that caused this phenomena as we get now is that back in 2000, let's say 2004 or 5, the big institutional funds found the commodity markets, right? So, there's about $800 billion in funds that trade the commodity markets now. And the S&P market's always been well-funded because people use the ES for hedging. So, and then, we have all the nonsense we have to deal with HTF and algos and so on. Everybody's trying to create some sort of edge. So as we look and start out the day today, the bull bear zone is at 2070.75. We got the top of value at 2071, 2060. You put these in correct, Anthony? And
Yes.
Yeah, okay. 2062.75 is the point of control. 2053.5 is the bottom of value. We're starting out with the pivot, and a 5-minute pivot is in a sell, which I think, with all the longs that are in the market, you're probably going to see some rebalancing this morning of that. We've got the Russell in a sell right here. So to take out the Russell, you got to get above 1172.80. All right. Here we've got the Dow in a sell. We got to take out 17,773. Okay. And then last but not least, we got the NASDAQ and a sell. And you're going to have to take out right here. Okay. 46.71 half. All right. Okay. Now, when we finally roll out the program and the indicators, you will be able to buy the indicators separately if you don't want to be in the trading funding program. But if you, and the nice thing about the indicator, so one of the things I do when I see that all these, so you're gonna have to learn how to use the indicators, right? Because I've been using them for a long time. So you got to go here and you have the ability to now look at the 15-minute pivot. Okay. All right. So now I'm looking at the 15-minute pivot and I'm saying, okay, so we're going to have to take out this 20, 80, 75 area to keep going down, right? So this is because this becomes, even though I have the 5-minute pivot is there, what is the 15-minute pivot, right? So sometimes I can catch the ranges and I'll do that for all the indicators, okay? So when I go here and I look at the Russell's already taken out its 15-minute pivot, okay? So then it kind of gives me good areas to gauge. And then I'll look at where the pivots come in, and then I'll go see where the corresponding profile formation looks like, right? And then those things help me make decisions on, whether I should be sitting on the sidelines or this is a good time to trade, right? So let me bring down I'll just bring this down as we see here. Here's the Dow. I'll pop this up here and I'll put the 15-minute pivot here. So it's the same pivot system, and the system works on multiple time frames. All right. So we've got the Dow is through the 15-minute pivot. Okay. All right. So, and then I'll just keep going and doing the same thing. And then what I do then is I kind of draw those and put them on my chart if I want, indicating where they're at. Right. So this is all part of how, if you get in the program, you will learn how to use the indicators and so on. And here you can see the NASDAQ has not taken out the 15-minute pivot, right? And the S&P is trying, right? So what's the next logical thing for me to do? I go look at the 30-minute, right? And since profile is basically on the 30-minute pivot, okay, it's always good to look to see what it is. I'm sorry, the profile is on 30-minute bars. It's always good to look to see where the 30-minute pivot is. All right, so we're looking here. So 2077 half, all right, should be an area that we should get support at, okay? So looking at the 2077 half area, so if now I've told you, okay, all the 5-minute pivots are in a sell. All right, so so I had a person last week tell me, oh, I jumped on the 5-minute pivot. It's just letting you know that the trends are starting to change, right? And since charts are fractal in nature, you would think that the 1-minute chart is going to look like the 30-minute chart, which it will, but it will take time for them to look alike, right? Because we're in different time frames. Hopefully that makes sense to everybody and everybody out there. Okay. If there's questions coming in, Anthony.
Yep.
Okay.
So Dodge Trader says, but doesn't core structure reflect news?
Look, Dodge Trader, look, here's the deal, baby. News is, years ago when I first started trading, there was no such things as electronic markets. There's no such things of democratization of information. Okay. So it's part of what we got to live with now. Okay. Poor structure doesn't reflect news. Poor structure, as far as let me rephrase that. It reflects news, but it also reflects who the participants are. So when we get markets that move straight up with great big buying tails, all right, and we're all like the little guy going, my God, we can fade this, we can fade this, we can fade this, and it keeps going up and or going down, right? Up or down. It's the buyers, man. It's the institutional buyers hitting the computer button that says we got to buy. Remember, these guys are moving billions of dollars. They're not moving, $4,000 or $10,000. They're moving billions. So they have to trade thousands and thousands of contracts. All right. And so that becomes a function of price meeting, where price and sale becomes becomes, where the two meet, right? So, yeah, news affects it, but it's the participants. Look, in the heyday when I was trading in the pit, we did 120,000 contracts a day, bigs. Times that times five, it's still only a 500,000. We're still doing 4 million on a good day. We're doing double the volume, 3 times it, 4 million minis, right? I mean, think about that. 4 million minis. If you divide that by five, right? It's just the numbers are getting bigger, right? So, and more participants. And the other thing was when I left trading in 2003 and I stopped trading for about 6, 7 years, there were only about 450,000 people worldwide who traded commodities. And that is with everybody. I mean, that means professional CTAs, hedgers, and funds. Now there's about 5 to 7 million people who trade commodities. So, reaction to news and more people in the market, yes, create poor structure. Did that answer the question, or did I ramble like a goof?
No comments on it.
No comments yet? The rambling. All right. So let's go back and understand that I look at these multiple time frames, okay? And, it's hard to take the news out. Look behind me. These knuckleheads these knuckleheads with the pretty faces behind us are talking all the time. Oh wait, they're talking all the time. There's a whole industry built on news now of CNBC. What the reason I got on CNBC the first time? Let me go. So let me bring in the other markets, and then I can tell some stories and be like daddy old man. Okay. All right. Here we go. Let's look at oil. All right. There we got it. All right. 41.30, top of value. Bull bear zone 40.97. Point of control 40.77. All right. Value was 40.56. All right. So there was one of the guys on Bloomberg this morning. I'm listening, and he's going, look. And I love this guy. Harvard, this, that, whatever. It didn't matter. He talked sense, right? He talked sense. And here's the sense. The Saudis and the basis for their oil is in the low 20s. And they're going to inflict pain on the U.S. fractors, the Russians, the Venezuelans. They're inflicting pain because they want to inflict pain because they're going to keep producing oil and it doesn't matter to them. And they're going to drive other producers out of the market. That is their goal. So let me tell you something. It's what you would do if you had control, right? I know all you people would be better. Everybody would say, oh, no, I wouldn't do that. I wouldn't destroy my competitor. I'm more social conscious of that. Nonsense. That's what they're doing. They're inflicting pain. And when they get done inflicting pain, they have to get the price down to about $30 to $25. And that's when oil is going to bottom out. You heard it here. All right. And I didn't go to Harvard. All right. I just understand pain. I've had a lot of it in my lifetime. All right. So it's behavioral science. And they are going to drive oil down to $25. All right. Gold. All right. So there's an interesting thing yesterday, right? Why didn't gold, gold's going down now. Here we are at the value high of 20 or 1078.5. Bull bear zone 1077. Point of control 1076. Value area low 1074.20. Okay. Let me move this up here. It is trading lower. Actually, we just had a little spike up. What do we have? Some sort of number come out just now? Unemployment came out this morning. Well, we're getting a little spike up, but look, the key is, right? Remember, I've been telling you this the whole time. Nobody, and like I said, I will argue with everybody until I'm blue in the face. Gold is a demand product. It has nothing to do with supply. Okay. Now here's the bull bear zone at 1077. It has nothing to do with supply. It has everything to do with demand. And if they raise rates and people can, and people, you're not going to take you're not going to go, oh my God, I'm getting 1% now. I'm going to get rid of my gold. But the big holders of the assets, that are holding billions of dollars of gold will move out of gold because it has a carrying cost. All right. And so it's a demand product, and when they want it. All right. And like I said before, you can't produce enough jewelry. You can't produce enough jewelry to or use enough jewelry to create a supply shortage. All right, there it is. I'm sorry. All right. So I think gold, as long as they raise rates, once they raise rates, then we're cleared to go down to around $1,000. All right. Until then, I keep saying this. I know I'm a broken record every day, but that's where it's at. Okay. Unless some unstabling factor like global slowdown is worse than we expect, and something happens to topple the economies of what's going on in the West and China and so on, then we'll have a problem. But this is interesting that gold and the bonds rallied after the Fed minutes, right? So, there's still some uncertainty. I mean, like I said, there's two scenarios that we're going to get. The one scenario is they're going to raise the rates a quarter point. It's going to cause a problem. But what's going to happen is that the Fed won't stop quantitative easing. They won't stop QE. So they'll still buy the bonds, which is a bad thing for us because they're going to make the banks buy the bonds. And the more they make the banks buy the bonds and their reserves, the less money they're going to lend out. Okay.
Present screen. I know you guys talk about this chart. It's hanging up.
Okay, there you go. All right. So here's bonds, right? We got a bull bear zone on 150 or 154.02. So I'm a little concerned that so what will happen if they raise rates, then they still do QE, then that's a problem, right? And that's the problem of what's going on, right? The little guy can't walk into bank. You little guys walk into a bank and try to get a loan, even for your small business. And you know what? They look at you like you have two heads. Like, what do you mean? You want us to take some risk? You need an AR line? Are you kidding me? And that's the problem. They keep talking about the debt. The debt's not affecting the big guys and the rich guys. It's affecting us. So that's the issue that's going on out there. All right, I've been on the soapbox this morning. All right, let me stop sharing. Stop. All right, back. All right. So, all you people that are, look, I liked it when there was no electronic trading, right? We were the only game in town. You had to come to the pits. We were the guys. We were the high frequency traders, right? And then all the people out there, the Goldmans and the brokerage firms of the world said, what an unfair advantage we have. And what do? We get HFTs. What do the exchanges do? They don't let you know who's on the other side of the trades anymore. The E-mini machine used to show who was buying and who was selling. So if I took down a 100 lot or a 50 lot and even a 2 lot, it showed me on the other side who the institutional broker was who bought the minis. And now they don't let you do that. And I think that's unfair. And I think the exchanges need to let people know who the counterparties are, right? That's only fair. You should know who the participants are, right? So when we get enough followers, then we'll start putting pressure on the exchanges. Got it? Okay. Any other questions over there, Anthony? All right. Stick with us. The funding program is coming. The indicators will be out on NinjaTrader and several other ways to get to the indicators. And then that's all I can tell you. Look, I'm sort of a perfectionist. When I want to roll these things out, I want to make sure that everything's perfect. I know it won't be perfect, but we'll all have some feedback. Everyone won't be happy, but I'm going to tell you right now, I'm only taking people into the program that can get into the program. I'm not going to, and I don't want anybody wasting my time and wasting their own time. Okay. And anybody can do that. So, and this is not easy. This is hard. Look at me. Look at my face. All right. Look at me. I'm 40. I look like I'm 105. Okay. No, I'm not. But anyway, it's not easy, but if you get it down and you can keep your emotions out of this, you can make money every day, almost every day. Sometimes a news driven event will get you on the wrong side of the market. That's why you always have to trade with stops. Anthony is going to we put out a story from the pit today, and also we put out the rules, right? All right. So for you new followers who've never seen them, go through them. I wrote those rules 20 years ago, almost 20. 1998, I wrote those rules, and they still apply today. Okay. So everything that you're experiencing, and even if you've been doing this for 30 years, you're going to experience it for 30 years. That's what you're going to do, because you're going to have to fight those same demons all the time. I don't care who you are. I don't care which trader you are. I don't care if you're George Soros, Tigerman, all the guys that are the big guys. When they're in losing positions or and made a bad trade, it's like the worst day of their life, right? You got to be able to shrug that stuff off. All right, everybody, have a good day. See you tomorrow, and big weekend for me down in South Dakota. Not to South Dakota, down in Macomb, Plain, South Dakota. All right, talk to you later. Bye.